Good morning. This is Wednesday, February 1st, 2023. And it's about 9:15 a.m. Pacific Standard Time. So, as I mentioned yesterday, the market's, even Monday, the market's just going to kind of gyrate right into this area because it's waiting for a decision from the Fed. And that's going to determine where this market's going to go next. So you got to keep in mind, it's not so much the Fed making a decision, it's where the market's at right now. The market's ready for a correction, and so the timing's good because the Fed's going to make a decision. And like I said earlier, would be ideal at 11 o'clock, that's 2 hours from now, when the Fed speaks, that this market would poke up in here. And if it does, I'm going to just load up on put options. I could load up on put options right now, but they're going to be a lot cheaper here. And then the market will probably continue down because it's ready for a correction. So what I mean by that, so this is a 4-hour chart. So if you notice, let's see, I'll go back to the daily chart. So in the daily chart, each one of these lines is 1 day. And you can see how the market's been moving up. And the longer term, it's actually been, let's see, trend line. It's actually in a nice little bull market right there. Bull market within a bear market. So the market's been trending up since October, even though it hit here and it came down, and it from here to here it came up, and then it retraced, and then it came back up. So it's still in this little bull market right here. It's still going up. But just like every bull market or bear market, there's always trends. There's a trend, and then there's always a retracement, a large retracement, meaning that when a market goes from here to here, and then it comes down, it's got to retrace. Usually around 50%, a little bit more. So there's retracements. So it's a very consistent pattern. This is a 4-hour chart, and you'll see that's that line that I drew. And the market came up, and then it went back down. And it came up here, and it went back down. So these retracements are important because this market's only about one thing. It's about buying and selling. That's it. There's nothing else that matters. It's just buying and selling. So market came up, it retraced, it came up, it retraced. Now it's up here, and it's up pretty close to the top. And we've got a big speech coming out, and it's probably time for this thing to come down because we are technically in a bear market. You can see that line there. So this is what I've always called the danger zone up in here. Unless we're back into a bull market. But I don't see that happening with all the stuff that's going on in the economy right now. So that's my game plan, that it's going to come up here. So it's very important that you know that these markets will never go away. They're always here, and they're always going to do the same thing. They're going to go up, they're going to come down, they're going to go up, they're going to come down. And because it's about buying and selling, you can't just buy and make money. You have to sell, and then when it's low, you buy low, and it comes up, and it's high, you sell, and then when it starts coming down and it's low, then you buy. So if this thing comes way down to here, let's say, then eventually it's got to come back up here before it continues down, unless we have a crash, and those don't happen very often. You know, like here was one back in June, and that could happen here. But even though that came down, it came back up. So that's what happens, because once you're down here, now you have to make some money, and now you have to buy again. Comes up here, now you have to sell. So it's the same thing. I think you get the picture. Now here's a good thing about the markets, as they're very consistent. They're not going to go away, at least not in my lifetime. And they're always moving, no matter what. And I've got a chart here. Let's see. This one here is from 1929. So this is supposed to be the worst crash in history, or pretty close to it. And the market came down. It hit a bottom July of 1932. But what happened? It just went back up. Then it came down. Then it went up. Then it came down. Then it went up. See, so it's still moving. This market is still going to move. And as long as that happens, you can always make money. So the money, it just doesn't hit bottom and go in a straight line and then now nobody makes any money. It's, you know, it came back up, and that's a big move right there. So it's always going to move, and you're always going to make money with this. So the good thing about this is no matter what's happening in the market, you know, there's a lot of doom and gloomers there, and I'm not saying that they're wrong. They're probably right about as far as we're headed towards maybe the biggest recession or even depression in our lifetime, you know, even bigger than 1929. But it doesn't really matter if you're trading in the markets, because whether it goes up or down, I buy options. I trade options down, I trade options up. And it doesn't matter if the market's going down, I buy put options. If it's going up, I buy call options. So that's not going to go away. They're talking about the US dollar going away, maybe turning into crypto. They talk about people should be buying gold now because the dollar is going to disappear. Real estate at its top right now. There's inflation, all this stuff going on. But this market is still going to keep moving when all that happens. So just to give you an example, this is when COVID hit and it came down. It was a horrible thing that happened. And guess what happened? Just came right back up. And not only came back to break even, but it kept going. Made new highs. So even during a disastrous times, the market is only for one thing. It's about making money. It's about buying and selling. And you can see in between here, people sold, people bought, people sold, people bought. So it continues the pattern. So even if we go into a really deep recession or depression, these markets are still going to move. Like I showed you that chart, 1929, hit bottom, but it came right back up. Then it came back down, then it came right back up. So you're still making money in here. Now, of course, people don't understand this. They might have lost all their money, but before it even hit bottom, you know, they lost their home, they lost everything, you know. And the reason for that, the reason why people lose money is they depend on the system. And as long as you depend on the system is created for the system. It's not really created for the people. It'll create something for the people only to benefit themselves. Now that's fact, and that's just the way it's been for a long time. So if you're dependent on the system, you have your retirement fund in there, and you have money in the bank and all of that, you know, sure, that can disappear because it happened in 2008. And if this is worse than 2008, then it's going to happen again, even more of an extreme. So trading in the markets takes you away from that system. It teaches you the system, but it takes you away from the system, and then you can be independent. You can make your own decisions. So, like I said before, this market is going to continue to move. People might get wiped out at the bank. They might have their pensions funds taken away. They might have the real estate taken away. They might lose all that. But if you're trading in this market and you understand how it works and it keeps moving, you're going to continue to make money, even if people lose jobs. But you can't lose this job because this keeps moving. You're not going to get fired from this. The only way you can get fired is if you make mistakes and you lose all your money. But again, that's under your control. If you're under the control of an entity, corporation, some company, they can fire you. And if you're under control of the state or government, you can lose your pension. You can lose your everything, because whatever happens to them will happen to you. But if you're trading in the markets, now you have full control. So if you lose your money, that's all on you. So that's why we're doing this, so we can learn how to make money consistently. So the best defense in anything in life is to be independent, to ask questions, to learn, and to grow from that. And do your own research. Don't depend, listen to both sides. But, this is a big game that people are playing. And if you're on the wrong side, you're going to lose everything. So, okay, so there's enough of that. So that's what's happening today. I feel like the market's already gone up quite a bit. We're at a pivot point. I feel like it's going to retrace how far, I'm not sure. And that's kind of the tricky thing about trading is you have to know when to get out. So let's say if this market comes down here and it stops and it retraces, then you should get out before that. Now, if you want to stay in long term, then you just wait till maybe hits bottom somewhere down in here, and that might take a month, might take a couple weeks, I don't know. But you buy your options further out. So you got to find out your own trading strategy. You got to figure that out. What fits your personality? What doesn't fit my personality is long term, is buying put options here and just waiting until they get down here and sell. And that's one strategy, but it doesn't fit my personality. So you got to find something that fits. And you'll know because it feels comfortable. And I'm not a day trader because that doesn't fit my personality. I don't feel like sitting at the computer all day long, just going in and out. Now, I will day trade once in a while just for fun, but it's pretty rare, just a couple times a month. But I don't do it every day. Those are day traders. So I'm more what's called a swing trader. I'll go in and then I'll sell. Like I can buy here and come up here and then I can sell. Wait till the market comes down here and buy, come up. Now that seems easy because now you have to find out where the tops are and where the bottoms are. And that's something that you're going to have to determine, and you're going to do that through experience. You're just going to feel it. Like right now I feel like this is the top. Now I could be wrong. And if I am and the market continues and it does that tomorrow, then of course I'll get out because then I don't know when it's going to turn around. Eventually it will, but I'm just hoping. I shouldn't use that word hoping. I'm using all my knowledge and my experience and deciding that that's what's going to happen. This market's going to turn around starting today and then continue for several days. So again, if I'm wrong, I get out and cut my losses short so I don't lose a lot of money. So I'm pretty sure I'm right, and that's a game plan for me. Now for you it might be different. You might buy options that are further out and you say, I'm just going to wait till it goes all the way down and then I'll get out in a couple months. That's one way to play it. Or if this market continues up, maybe you're going to buy call options to go up. I'd be kind of concerned about buying call options at this point. if anything, I would buy call options down in here at the bottom of this balance area, and then sell somewhere in here. So many different strategies, but you got to find out the one that works for you. So, okay, so that's it. We've got an hour and a half until the Fed speaks, and then the market's going to start moving around. And for, I don't know, maybe the first hour, it's just going to gyrate, and it's going to determine, it might just pop way up in here. And it's just going to go, it usually goes crazy for the first hour because it's looking for direction. And like I said, if it goes up higher, then that would be ideal for me to get in, because for me, I think the market's just going to keep coming down after that. So we'll see what happens. I got an hour and a half, maybe 2 hours until I actually get into the market, and then keep you up to date tomorrow on what's going on. Okay, talk to you later.